The Managing Director Corporate Banking at State Bank joins us on the phone line. Mr. Pradeep Kumar, if you heard what the Finance Secretary said, and in the light of the inflation numbers, do you think that you could reasonably expect a rate cut even before September 29?
Good morning, Lata. Yeah, I think everything points towards that, the lower inflation. Plus, I think there is this issue of the yuan devaluation of the Chinese currency. The RER, I'm told, is around more than 125. So we can expect more devaluation of the Chinese currency. If that happens, there is a need to, I think, dramatically cut our rate. Otherwise, the rupee will be stable. I think we'll have to let rupee depreciate. Otherwise, many of our exporters and importers will be in deep problems.
Okay.
So I think the RBI governor has no choice, and indications from the US also is that the Fed rate hike is unlikely to take place in September 17th. So I think the governor has now an opportunity to reduce the repo rates now, even before September 17th.
So if we do see a out of policy rate cut, Mr. Pradeep Kumar, can we expect to also see a transmission by the banks to the system?
In fact, so why not even in advance of that? If the actual inflation number and therefore inflation expectations is anyway falling, should we expect a dramatic cut in deposit rates from you?
See, if you have been seeing SBI has been the first to cut rates off the block. We have been cutting, and we have cut, I think, even in the month of May, June and July. We have even imposed a restriction on bulk rates, bulk card deposits of about 50 crores. Although we have a card rate for bulk deposit, we have said it's applicable only for 50 crores. 50 crores and above, only if we need it, we will take it. So our deposit costs have come down in the last quarter for 4 basis points. If the deposit cost starts coming down further, I think there is a scope for a rate cut.
Okay. No, but looking at this inflation number of yesterday, 3.8, will you have the courage to go ahead and cut deposits even further? What's your one-year rate? And should we expect that you will lower it?
One-year rate is 7.75.
And you will
I think
at 7.75, you are having an inflation rate of 3.75. Do you see that, imminent, irrespective of what the policy rate is, you have elbow room to cut, you think?
See, the elbow room to cut will depend upon our average cost of deposit. If it comes down further, there will be elbow room.
No, that's what I'm saying. I'm asking you deposit, sir. I'm not asking you lending rate. I'm asking you deposit. Are you cutting that?
No, if I see a trend in the deposit rate coming down, then there will be a scope. But you must also understand that some of the competing small savings rates that are at very high levels, we have been in discussion with the government. We have been telling Reserve Bank of India that the government has a role in cutting small savings rate. So they have to follow the Shyamala Gopinath Committee recommendation of the small saving rate being just 25 basis points above the 10-year T-set.
Okay. Yeah. Sir, just one word on, the quarter gone by. I mean, what really spooked investors is the fact that this time around SBI saw not just very high slippages amount at around 7,300 crores, but also slowing growth trend, which we're seeing across the PSU banking space. What's the sense you're getting about the quarters to come? Do you think this slow growth and high slippages trend could continue?
Yeah, I disagree with you on the high slippages. If you see, the slippages have to be seen on the respective quarters. Q1 of 14 had more than 11,000 crores slippages. Q1 of 15 has 9,900 or 9,400, and we are now at 7,300. There's a clear deceleration. The first quarter of the year is always slightly difficult because a lot of time is spent on audit, people move, promotions happen.
No, sir, but I'm comparing it more on a quarter-on-quarter basis. I mean, last quarter it was just at 4,000 crores.
Yeah, I agree with you, but it's not. You cannot compare it on quarter-on-quarter. There is always a seasonality in the country. We have to accept that. We always feel the last quarter is the best performance. Regarding the net interest margin, you are the people who have been advocating base rate cuts. We were the first of the block to cut base rates. If you cut base rates, and the deposit rates don't fall in tandem, there will be a pressure on the NIM. Of course, this has been accentuated by the fact that the growth momentum is very slow. During the first quarter, we have our loan book did not grow, but we have done a review in the corporate banking group. We have done a review account-wise in the first week of August. We had a conclave where we did an account-wise review. We are fairly confident that by the end of the year, we will reach around 14% growth in the corporate banking book.
Right.
In the retail banking group, my colleagues tell me around 18%. They will be able to reach 18%. So overall, I think the bank should be able to grow between 14 and 15%.
Okay. Mr. Pradeep Kumar, just hang on to that thought, please. We have Mr. Mohan Shenoy, the president at Kotak Mahindra Bank, also joining us on the phone line. Mr. Shenoy, you must have heard the finance secretary as well, studied the inflation numbers. Like Mr. Pradeep Kumar, you think the case is ripe for a pre-September 29 rate cut?
No, Lata, I did, think about it, and my own considered view is that the inter-policy rate cut is unlikely because I feel RBI will wait for clarity on the event risk arising from yuan devaluation. They will also look at, the circumstances that will emerge when, if there is a Fed rate hike in September. And also, remember, RBI will be keen to see whether the fall in CPI is sustaining or not. In other words, persistence of benign CPI is what RBI will look for. Only if that is there, and of course the progress in monsoon.
Okay.
So I feel a inter-policy rate cut looks very unlikely at this stage.
No, actually, Mr. Pradeep Kumar was also arguing that the landed price of most metals or practically anything you import from China has now become so cheap, additionally cheap because of the devaluation, that there is a case to actually let the rupee go towards, above the 65 mark. And therefore, that strengthens the case for a rate cut.
Yeah, the depreciation of rupee, yes, is required to boost exports, to remain competitive in our exports. But I think that depreciation will not be disorderly. India fundamentals are strong now, so I don't see any dramatic, impact on rupee. Gradual, calibrated manner depreciation is possible over a period of time, but I don't see anything knee-jerk happening out there.
Okay. No, actually, I think more than exports, his argument is that the landed price of so many things will make several Indian units unviable, even those domestic companies selling to domestic consumers. Mr. Pradeep Kumar, do you think that with the global fall in commodity prices, just the events of the last 3 weeks, fall in commodities, Chinese devaluation, landed prices falling for several Indian imports, the situation of several smaller companies, metal companies, even big steel companies has gotten more vulnerable?
Yeah, any decrease in the import price makes the domestic units more vulnerable. But good news is that yesterday itself there has been a hike in duty on 2.5%, and we have been talking to the government. I think the government is seriously contemplating of our safeguard duty on steel imports. I'm sure shortly the government will announce even a safeguard duty to protect the domestic steel industry from the Chinese dumping.
All right, Mr. Pradeep Kumar, thank you very much for joining us. Mr. Shenoy, just one more word from you. Do you think that there is going to be a series of deposit and base rate cuts with this level of inflation?
No, as I said earlier, we need to see whether there is this benign CPI which we have seen for the month of July, whether it will continue. All indications are that the benign rate should continue into August and thereafter. But I think since we are not expecting a inter-policy rate cut, any decision on, deposit rate cuts or even base rate cut will be only after RBI acts, and that is expected somewhere in September. Yeah.
All right, Mr. Shenoy, we'll leave it at that. Thanks for joining us. So the